Hey guys, welcome back to Fast Stock Market News. In this video, we'll probably see if we can get a little bit of hopium in the markets. We have Tom Lee that's on CNBC that gives us some kind of hope for the remainder of the year. I'll also let you know why the markets were down in the morning and also why they went even lower during the intraday. Alright guys, stay tuned. Welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So welcome back to the channel, guys, and just a reminder, if you're not subscribed, consider subscribing, liking the video. I would greatly appreciate it. So today the S&P 500 finished lower. It finished down on negative 1.08%. The Dow finishing negative 0.81%, the Nasdaq finishing 0.73%, Russell down 1.49%, and crude oil once again finishing in the green. So I'll tell you why, guys, why the pre-markets were down and why this little drop also happened with all the indexes in addition. So from the get-go in the pre-market, we were down basically because the mortgage demand has been falling to its lowest level in 22 years. Because currently, as you guys might or may not be aware of, the mortgage rates are currently about 5.4%. It's kind of squeezing out people from buying homes. It was already difficult enough to buy a home as it was, but this is kind of like a ticking time bomb that a lot of people, a lot of bears, and a lot of skeptics are thinking this is the beginning of the end before the big housing crash. So that's kind of like why we were trading lower in the pre-market. But the big reason that we fell a lot lower in the intraday around 11 a.m. Pacific Standard Time. You can check the SPY right here. Around what time do we fall down? Yeah, about 10 a.m. we started dropping. It's because it officially came out that oil had breached the 120 per barrel mark. So oil prices continued to rise on Wednesday. The price of the U.S. benchmark West Texas Intermediate sits around $120 per barrel, while the international benchmark Brent crude is approaching 122 barrels. So it's pretty bad here in the U.S., guys, $120 per barrel. But in Europe, it's far worse. They're already at $122 per barrel over there. But I know it's all bad right now, guys. I know the housing bubble is like something that's dawning on the market now, along with the oil prices with no end in sight. In fact, I think if you saw my video yesterday, guys, I did tell you that Morgan Stanley had predicted, actually it's right here, Morgan Stanley had to see that the oils could rise to at least $130 per barrel, if not as high as $50 per barrel, and that could just be absolutely insane prices at the gas pump later on this year, especially during the summer with a lot of people traveling. But as much as bad news that's been being thrown at us day in and day out, there is some hopium. He is the Messiah. He is the chosen one. He is our savior. It is Tom Lee. He was on CNBC today, and take a look at what he had to say.
Time tech stocks under pressure again today. The Nasdaq now down nearly 23% this year. Our next guest, though, is betting on a turnaround coming as we head into the back half of the year. Joining us now is Tom Lee. He is the head of research at Fundstrat, of course, a CNBC contributor as well, and he made his way to Post 9. It's good to see you.
Great to see you, Scott.
You sat down, you said, I'm feeling better about this market, and why are you feeling better? Because there are a lot of issues out there, Tom.
That's right. I know the Fed's got a tough job, and I think all of our clients are just watching inflation prints and nervous about Friday. But it looks like a lot of things are happening around the economy in the world that are helping the Fed. And I think one of those is that I think there's a lot of goods that are going to start seeing discounts, both cars and apparel, furniture, everything Target and Walmart have. And now I think housing is cooling pretty dramatically, and that's going to lead to both job loss and some wealth effect. And so I think the Fed has the market doing its work for it, which means investors don't have to worry about hawkish surprises.
Still sticking to your choppy now, but strong second half of the year, and we can reach some levels that look, at times unattainable, to be frank.
Yeah, that's right. I think a lot of folks think, hey, look, the S&P won't see 4,800 again for 5 years, but we have to realize there's some bullish themes really coming together. One is the labor market is creating wage pressures, and that's solved with technology and automation. That's great for tech. I think eventually the war ends with Russia and Ukraine, and then we have a post-construction build and commodity prices fall. That's really good for U.S. companies. And now that stocks have come in, I mean, tech is cheaper than it was in 2003 after the dot-com, and there's been a real loss of faith in owning some of these names that are important. So I think there's a lot of upside surprise. You
don't have any concerns whatsoever about oil pushing towards 130, nat gas pushing towards $10. I mean, we can stop there, but then I would continue and say the very stocks that you like so much, these large cap technology stocks, earnings are, I feel like, suddenly in question. Microsoft told you what they did. They're now concerns about what Apple might deliver as a result of the services business. Intel, not that they're in the same ballpark, obviously, as Microsoft and Apple, but you catch my drift.
Yeah, I do. Nobody wants earnings cuts. I think that feels like it's another leg down for folks. But I think the surge in oil is almost a barometer of the progress of the war. So I think as long as there's war, the OECD had a great report today showing that half of the inflation surge this year is really war-related. And once the war comes to a conclusion, I think we see oil and food prices really start to disinflate. But it's painful now. I don't think that means tech has downside. You know, if we have estimate cuts, but a lot of it's priced in, then it's just a risk-reward question.
There you have it, guys. A little bit of hope for us retail investors. That's the news for today. Thanks again for watching. I'll see you again tomorrow. Take care. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.